Hello and welcome to another episode of Talking Wealth. My name is Michael Batnick, Managing Partner at Ritholtz Wealth Management. I am so excited. On today's episode, we are talking with Lisa Salvi, Managing Director of Business Consulting and Education at Charles Schwab Advisor Services. We are going to be diving deep into Schwab's RIA benchmarking study, which is the leading study in the industry with 1,288 firms representing over $2.4 trillion in assets under management. This study reveals actionable insights into what's fueling growth across the industry. We'll examine how the most successful firms are delivering organic growth, why personalized client experience and service expansion are top priorities, and how talent, technology, and operational efficiency are becoming non-negotiable must-haves for RIAs who want to scale intelligently. But first, a word from our sponsor. Today's episode is brought to you by Batnick. Rare earth metals are the hidden backbone of modern technology and defense, powering everything from smartphones and electric vehicles to fighter jets and wind turbines. Batnick recognized this early, launching the Rare Earth and Strategic Metals ETF, ticker REMX, 15 years ago, well before supply chain security became a global priority. Today, China dominates the production and refinancing capacity of rare earths, creating real challenges for global supply security as these materials are essential for technological innovation, clean energy, and national security. That's why countries around the world are racing to build their own supply chains and reduce reliance on China. As this global shift continues, investment in the rare earth ecosystem is growing rapidly, from mining to advanced manufacturing. Investors can access this powerful trend through REMX. Visit vannack.com/REMX compound to learn more. All right, Lisa, welcome.
Hello, thanks for having me.
Yeah, excited to do this. So, for those living under a rock who might have missed the last 19 years of this study, help us set the stage for what we're going to be talking about today. What is the RIA benchmarking study?
Yeah, well, it's just wild to hear you say 19 years because we've been doing this forever now. But we started doing the benchmarking study many years ago because we had advisory firms who were out there. They were starting to grow. But unless you can compare yourself to other firms, you don't really know, are you doing really well? Are you not? How do you start to prepare for the future? So every year from January through March, we field our RIA benchmarking study. Firms go in and they share a tremendous amount of data on basically every single component of their business, right down to the P&L. And then they get back a customized peer report. We just this year launched our dashboards that can now compare to more comparison groups. And they can see how they're performing in their peer group, or they can compare to larger peer groups. And they can see, what do I need to start doing to get ready for the future? We also have a group we call our top performing firms. And that's really interesting because that's how you can start to see, regardless of size, how do you outperform? And that's probably, I would say, the most central question in my career is, how do some firms outperform?
I'm lifting this from somebody. I can't remember who deserves the credit, but somebody said the RIA industry is a pretty lonely one, meaning we don't really, outside of the study, know what our competitors, for lack of a better word, are doing. Because how would we? It's not like, right? We don't like meet these people once a month and discuss strategy or, hey, what are you doing? And there's a million different areas within everybody's practice. It would, you could spend a week and not even scratch the surface. So the study that you all are conducting is critical because it really truly is a benchmark, and not just to the rest of the industry, but as you've mentioned in recent years, breaking it down to a peer group to make a better apples to apples comparison. So no question there. I'll get to a question in a second, but I'm going to use some of the charts in the report. So if you are listening to this and you would like to see these charts, you could either watch us on YouTube or just Google 2025 Schwab RIA benchmarking study. It's the first result. You'll see it. Okay. So I want to start here. What do you think the top firms, as you call them, what are some of the things, and I know you can't boil it down to one or two, but for the sake of this conversation, what do they share in common? That if you were to say, this is the prototype, here's what they do really well.
Yeah, I love that question. But before I get to my answer, I just have to tell you a really quick story. Just got back from Schwab Impact a couple weeks ago, and I got to facilitate this great conversation with Simon Sinek on the main stage. And we got all these audience questions, right? And I'm asking the questions as they come in. And my favorite one we got was, why is leadership so lonely? So kind of exactly what you just said, running a firm or being a leader, it can be a really lonely thing. You need to get out there and talk to other people or see what other people that are dealing with what you're dealing with, what they're going through, because how else do you really get good ideas and how else do you figure out what to do? So I really love that you just said that. Okay, top performing firms. So I will tell you, so we have thousands and thousands of variables, right? We get all this incredible data that firms share with us, but we wanted to go beyond just the basics, like, what's your AUM and your revenue. And so several years ago, we went through this giant project with our data scientists, and we wanted to boil it down to the top 15 or so variables that helped you really understand outperformance. And so we did all this analysis, went through, did all this testing. And what we came to is we took every firm that participates. So let's say there's like 1,200 firms that participate in a given year. We created an index. We put them on this firm performance index. The top 20% of firms, according to these variables, become our top performing firms. And I always get this question. People think it's just going to be the largest firms because of economies of scale, or they think it's like the names they know. It actually is representative of firms of all sizes, and it's representative of firms that have been around for a short period of time and a long period of time. So it really boils it down to the behaviors and the way they're professionally managing the firm that they get the outperformance. So top performing firms, why should you care? They get 2 times the revenue growth in a 5-year period. I mean, who doesn't want 2 times the revenue growth in a 5-year period? I think almost anyone in any business would sign up for that if they could. So not only are they doing well on all of the normal revenue and, AUM growth, all of those kinds of things, they also are doing some things that really set them apart. They're more likely to have a strategic business plan. They're more likely to have defined their ideal client persona, so they know exactly who they're designing their business for. They have a documented client value proposition. They have more of their workflows integrated with their CRM system. And as you look across the whole study, they do a lot of things just really well, professionally well. They might be more likely to have an employee value proposition. So they really take the time to work on their business and to document their strategies. And then they kind of get the compounding effect of that year after year after year. So when you're looking at the slides and you see top performing firms, you can kind of start to get a sense for not only the outcomes and the growth and the revenue growth, but you start to see some of the behaviors as well that they put into place that leads to those outcomes.
This is a scale business, and clients are getting more demanding over time. They're not asking for less. They're asking for more. So
Right.
one of the things that's great about this report is you show the different services that firms are offering, and you compare it over time. So you look 3 years ago and then 6 years ago. Or I can't get whatever the numbers are. My eyesight is very poor, so I
Mine
apologize. I
too.
can't read this. But it's going up. Like whether it's financial planning or charitable planning or tax planning, firms are doing more, or they're being asked to do more.
Right.
But scale and growth can be expensive. So when you think about firms that are in the top firms that are doing double the revenue, what about the bottom line? Because adding all these ancillary services, it's
Yeah.
not cheap.
Yeah. So you talk to any advisor, right? And there's a little bit of that margin compression, right? So if you keep adding services for the same fee, you start to feel that margin compression. The best practice would be know who that ideal client is. So if I know exactly who I'm building my business for, do not just add all the services because other people are adding services. Add only the services that are going to make you more irresistible to your ideal client. And that can look very different than just the typical ones that you see on the slide you're looking at right now. It could like one firm I know who did a tremendously incredible job with their ideal client persona. They are in kind of like the Silicon Valley area. A lot of their clients have a second home in Tahoe. Like, they've really boiled it down. They have a 3-page document detailing exactly the type of family they built their business to serve. They realized that their ideal clients, a lot of them tend to not speak English as their first language. So instead of adding a service, they added a couple of employees who spoke that other language. And that opened up an entirely new arm of organic growth capability because of the other family members within that community. So it's not always just about adding a new service. It's about really thinking about what do my ideal clients really truly need, and that can open up a lot of organic growth. So those are the questions I want advisors to ask themselves. I want them to think, okay, if my ideal client is, Lisa Salvi, what does Lisa Salvi want from us? And I want not only the leaders to ask themselves that question, I want their employees to ask those questions too, and about every facet of the business, from the tech stack to how they communicate to the services they offer.
Trav, let's pop up a chart too, please. So this slide shows a bunch of the different offerings that RIAs provide, whether it's planning, which is 95% of firms do that. I can't imagine in 2025 a firm that doesn't offer that, but fine. Charitable planning, there's tax planning, which has gotten increasingly popular, estate planning, and so on down the line. And what's interesting here is you break down what percentage of firms, and correct me if I'm wrong, include this as part of their fee. So you would expect financial planning, 84% of the firms that do it, that's included in the fee. Something like business consulting, on the other hand, only 64%. Am I reading this right? Only 64% don't charge on that?
So of the 40% who offer business consulting, 64% of them do it in their regular asset management fee, right? So you got it. Yeah.
Okay. So chart off, please. When do people ask you for advice or how to interpret the results of the study? Or is it just like, here, have at it, talk to whoever you want to talk to?
So you're looking at the results we make public to everyone, and those are kind of like rolling up all the results across all the firms that participate. Individual firms get their own personal results versus their peer group, and we sit down with them and go through them. And often it'll lead to opportunities for a consulting engagement where we could help either build on a strength. I think sometimes firms are not great in our industry at knowing where they're really strong at something. Or it could be, we just know we need to work on our cybersecurity, or we know we need to work on documenting our client referral process and training our staff on storytelling. It can look really specific on different things. The nice thing is when you do benchmarking year over year, you can also track some of your progress and see some of those results.
Most people running businesses, again, this has changed over time as our industry has professionalized. But I don't know, say 10 years ago, it was a couple of advisors. Most of these advisors did not necessarily go to business school. They were taking a chance and breaking away and thought like, okay, maybe I could just do it on my own. But as you get more successful, more of your time is working on the business and less of your time is doing the planning. A lot of advisors just don't really know what they're doing in terms of running a business. So having the data and being able to lean on people like you is really helpful. This is a constant story in the study. So every year you ask people, like, what are some of your biggest challenges? And every year, number one, maybe it falls to number two sometimes, is new clients. So chart 3, Trav, we've got, you break down firms that are under 250, over 250, and then you segment top performing firms. And what I see that jumps out is you've got the AUM growth by year. And of course, the market has been very favorable. The wind has been in our back for the better part of the last decade. But organic growth, and I even think this is probably optimistic, so I'm curious like how these numbers shake out. Mid to low single digits, I guess it, depending on the group. Top performers, as I mentioned, perform significantly better, as you mentioned. Mm-hmm. But how competitive is the market getting? Because even though the pie is growing, it is a finite pie in terms of the number of households that we can serve.
So one, I love that you put this slide up here because I think the most important metric for any advisory firm to know is what is their organic growth number, because that strips out all the noise I mean, fortunately, it's been really positive noise to your point, but all the noise of the markets, right? So that kind of shows you that's how my strategy is resonating, right? So my strategy is doing well, but it could be doing better. 5% is okay for 250 plus. When you look at those top
It's
performing
not
firms,
great.
that's where it gets interesting. Like that's where it gets like enviable when you're at almost 13% organic growth. And that's where I would look to firms to say, hey, if they're doing it by putting these things in place, that's great. I still am very optimistic because I think there's a tremendous amount of assets and clients that would be very well served with an RIA that are just not with one today. So I think we estimated something like 37 trillion sits outside of the RIA channel that would be well suited and is not there. So I still think there's a tremendous amount of education and awareness. And we know that once people find their way to working with an RIA, they stay there. We've tracked it for the past 10 years. It's 97% retention rate for 10 years. So if you can get someone to have that conversation and to come to an advisory firm, they're probably going to stay. So I just think getting more of that prospecting happening, telling the story, Schwab does some awareness advertising as well, but I think there's a lot more and I don't think we've capped out yet. So that's my perspective. I don't know. What do you think?
The retention numbers so chart 7, Travis, you have this at 97%, as you mentioned.
Yeah.
And this doesn't fluctuate that much. Like it is consistently above 95%, which it is interesting because I think this just speaks to the power of inertia. Because do I think that the RIA channel in general does a great job for their clients? Yes, I do.
Yeah.
But I think the point is you really have to like mess it up to lose a client. There's got to be something that you're not doing or doing that they don't like in a material way. So on the organic, go ahead.
Oh, no, I was just, I'm not trying to interrupt, but other channels don't have that retention rate though. So there isn't. Well, just other channels like Wirehouse and beyond, they don't have the same 97%. So we are at the RIA channel is at the highest retention rate, even though inertia would exist in all models, correct?
Yeah, no, that's a fair rebuttal. Why do you think that is?
I do think the client experience is very strong that RIAs consistently deliver. And I do think that's part of the reason why you see a lot of PE money being very interested in coming into the RA model, because you see strong retention, good client experience, and growth.
So this has been the dominant story in our industry for the last decade. During the ZIRP era of zero interest rates, when institutional investors were seeking alternatives because 1% nominal bonds was not very fun, they discovered our industry. And it wasn't just our industry, obviously PE is everywhere, but particularly when you're looking at just the financial profile of one of our firms, we look like a bond, but there's a kicker. And of course, nobody could have known that there was going to be 15% S&P 500 returns,
right?
Which was just a cherry on top. But you've got this consistent coupon that really doesn't fluctuate. In fact, it goes up every year. Now, not literally, but that's what ended up happening. And then, of course, the story evolved and transformed and got competitive, and the multiples, in some cases, were silly. But we are so far into that story, and I would say for now it's been generally positive, to varying degrees. But you're seeing the companies that are growing inorganically grow faster than those that don't have outside capital. I mean, the numbers bear that out.
I mean, you said it really well. You see both. I think what the trend I'm starting to see much more right now is a return to the organic growth conversation, regardless of if you're also growing inorganically. So even the firms that are pursuing and doing really well at inorganic growth are starting to double down on trying to help the firms they've acquired grow organically also, or looking a lot more at the organic growth of the firms they are acquiring.
What are you seeing?
Maybe a couple of years ago. A couple of years ago, it was more about the talent acquisition in the story as the headline. And now it's coming back to the organic growth piece in my conversations.
I don't think that, and I'd be curious to hear your take. I don't think that RIAs compete directly with each other in the sense that clients are interviewing 5 different RIAs. I think generally they're getting introduced. It's a referral, whatever. But it's incredibly competitive in the sense that you've got obviously the custodians that are in our business. You have Robin and others. Like there is just Vanguard. There's so many gorillas that even if you're not directly competing in the way that I mentioned, you are competing with them. So how are companies that are growing organically successfully? Because at the end of the day, like that is what is going to be durable. We can't count on the market to keep going up every year. So what are some strategies that you're seeing work? Because everybody can't have a podcast or a YouTube channel. Like, and I know I'm talking my book here, but my point is it's ridiculously competitive. Seminars, center of influence, traditional mail. I don't know what are you seeing work?
So the number one thing and my favorite all-time statistic from benchmarking is if you have that ideal client persona that I keep talking about, like really well documented, client value proposition, well documented, and a marketing plan. If you have those 3 things all documented and they're good, those firms get 67% more new clients and more new client assets. And that is year after year after year. So I know we always like want this quick silver bullet in our industry, and that just doesn't exist, but that's the closest, like that's the trifecta right there.
So what does that mean? Like just do a great job and you will see results. I mean, I know it sounds simple and circular, but it's true.
And I mean, this is not only our industry either, right? Like every industry, you can't just build a business and like kind of be good for everyone, right? You need to build it and be really clear. I am building my business to serve this type of family or individual or professional. I know what their needs are, what their preferences are. I'm going to add the services they want. I'm going to communicate how they want. If I'm going to do an in-person event, it's going to be tailored for what they want. I'm going to partner with COIs who are also in their orbit or in their realm, or, you know, it could be a real estate agent who works with them, whatever it is. I'm going to be crystal clear on the value I provide. I'm going to tell stories. It's going to be on my website. My website's not just going to look generic. And then my marketing plan is going to be tailored to like,
so when you say
that flywheel going,
like people should have like professional looking PDFs that when somebody says, hey, send me something, here's what I do. These are the services that I offer. Are you talking about that specific?
Yes, it can be a PDF, but if you're going to start somewhere, your website's your calling card. Even though we still see 69% of growth in our industry come from client referrals and business partner referrals, all those people look at your website, right? Yeah. Like your website needs to be good. And if you are going to start anywhere, the About Us page and your bios are the top 2 places people look. And you need to tell a good story there. Don't just be like, we provide holistic wealth management services, blah, 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 and put a lighthouse on there. Like, don't do that. Tell a really good story. Or sailboat. I don't know. You know, those are the 2 most common. Tell a story. We founded our business because we wanted to work with people. Don't say we have 200 years of combined experience. Yeah.
All right. Well, you just insulted 70% of our listeners.
No, it's an opportunity. It's an opportunity. It's an opportunity.
All right. So how are advisors, switching gears, how are advisors feeling about their tech stack these days? Because as we think about it, I mean, it's so critical to both our workflows and the way that clients interact with us, but it's so much stuff. And a lot of it is nice to have, but you could just get so bogged down and you look at your costs, you're like, wait, I'm spending how much? So it's really nice to see the peer reviews and see how much other people are spending, because a lot of these services either don't really add anything to the bottom line, or they just take up so much time and mental bandwidth training everybody. And it's another widget, it's another thing. So am I describing the overall state of how advisors are feeling?
Absolutely. I mean, we hear this all the time from advisors, like they get it from every employee. Can we add this one more thing? Can I get this one more thing? And probably with the proliferation of all these AI tools, that's just going to keep going and going and going. So yes, they like to look at the benchmarking results and see what's in the tech stack, what tools people are using, and where they think they're getting the best ROI in those investments. It's an interesting world we're living in right now. I think there's kind of like two schools of thought. Some people are wanting to kind of simplify their tech stack a little bit, maybe have fewer providers, not feel like they have to have the A plus in each singular sleeve, and maybe B is okay and have fewer providers. And especially in anticipation of more AI tools, fewer providers, but where they work together more easily could be a good thing. There's kind of like the folks that think simplification could be a good thing. And then there's some that are really staunch believers that they just want the bargaining power. So they don't want to be like too closely aligned with too few providers. So there's kind of those two schools of thought that I am hearing. I don't know if you're hearing something similar.
Yeah, no, I think, yes. I think the answer is it depends, because it's not slowing down. It seems to be speeding up, and it's like enough already. But obviously, it's your job to stay on top of what is available, because I do think that AI is going to, in fact, I know that AI is going to be transformational for our business. And I'm talking about advisors that are listening. Certainly, business owners, we are going to be able to do so much more with our existing employees than we thought possible. If the average advisor was able to serve, now maybe not on the advisor side, let's just say I'm the client service associate, for example. If the average CSA was able to work with 175 households, that number is going to be 400. And so you have to stay vigilant. But this also begs the question of who has time for this? Like, when you're talking to firms, is there a point in their life cycle as they mature in which they say, okay, this is too much. Like, I'm just an advisor, or this person, like, I'm an ops person. Like, what do I know about technology stacks? Like, where is the line where somebody either needs to hire a consultant, and then maybe even going further, like a chief information officer or chief technology officer, whatever. How does anybody have the resources to implement a cohesive strategy that is not just like Scotch tape on Band-Aids?
I love that question. When we work with firms that are like going independent, I have a team that always helps with the tech stack, because absolutely that's completely daunting, right? Like, where do you even start? What do you need? And we do consulting with firms as well. So like if the custody with Schwab will help with the tech stack, and that changes too pretty often. Roundtables are also super helpful. So advisors get a lot out of just talking to each other, especially if they're contemplating a new vendor of any sort, to talk to someone else who's used it for real and like talk to them about the experience they've had, or even just the experience of the implementation. And outsourced like IT provider and different things like that, especially when they're growing and they're on the smaller side, absolutely great. You don't need a full CTO until you're getting a little bit bigger. And we kind of track when those roles get added in the benchmarking study as well. So they can kind of see as you grow, when does it economically start to make sense to add those specialized positions. I think it's going to be so interesting to your point with AI. I mean, 2025 was the year of the note taker. We're one of the few industries that has proven ROI on an AI tool. Like, we really did see time savings anywhere from like 30 minutes to, some firms are telling me 2.5 hours per client meeting with just that capability and that kind of like prepping the next step. I think, to your point, it's going to transform the CSA role, and it's up to us to make sure that they're still getting the right training they need. But I think that path to more senior advisor will go a little faster. And that's a great thing, I think, for everyone involved. Some firms that I'm talking to have already either hired someone to focus solely on AI or have repurposed a role internally. So they're a little on the bigger side, but firms are really thinking about that. We're hosting roundtables so they can talk to each other about those ideas. That's going to be a big area of emphasis for me and my team next year too, because this is just such a transformational moment we're living through. And I think we all need to share best practices with each other as we're kind of going through it.
No doubt. All right. Last topic that I want to touch on, and arguably the most important. I asked you earlier, what are some of the common characteristics of the top performing firms? And it's got to be people. And it is obviously the most important thing. Hiring great people. It's everything. There's nothing that's going to drive success or failure faster and more durably than making sure that you have the right people working alongside of you. Is there anything that you've seen that can give the listeners something to take away where like, oh, I didn't think about maybe offering this sort of, I don't know,
Mhm.
incentives
Mhm.
or a way of rewarding talent or whatever. Like, how do we recruit, retain, attract, all that good stuff?
Oh, such a good question. I mean, firm believer, people are your most important asset, right? Like, so you can have the best strategy in the world, but you need the people to make it happen every day, all day, every day. The biggest thing I would say, we've had a big emphasis since really when talent markets got super tight on helping firms put together their employee value proposition. So, the same way what your value proposition is for your clients, articulating what that is for your employees. So it would include things like your comp and benefits, which should be competitive, and you can track that. We have a compensation study. It includes things like vacation, all of that normal stuff. But then it's also, well, why should you stay here? Do you have a mentorship program, or do you give them professional development support? Do you have a career path? That one means a ton. That means a lot to people coming out of college, especially if that's part of your strategy. They want to know that they're going to have opportunities to grow and that it's a proven thing and not just like an idea. Is there a path to partnership maybe? When you talk to compensation experts, their best tip is to like pick one thing that's your shining thing in your employee value proposition and brand it and shout it from the rooftops.
Like,
So,
what could that be? Like, what could that be?
yeah. So Schwab, we have a sabbatical program. So if you're here for 5 years, you get 1 month off and you have to take it continuously.
That sounds horrible.
I know, it's awful, right? But what happens is it's like free advertising. You see like everyone's LinkedIn post of all these amazing things they do. So if anyone's going to search the company, what are they going to see? Like, wow, they really take care of their people. And even like other employees, you get to live vicariously through it. It doesn't have to be that. It could be honestly a really good mentorship program that's pretty informal and costs $0. You can win a candidate based on that alone, even if you're not paying the highest comp. I mean, it can be wildly different things. One firm I know literally gives people time off to go horseback riding because they all like to go horseback riding and that's like part of their culture. So it could be almost anything you want. It could be the path to partnership that you've branded and you name and it's on a tab on your careers page on your website. That is a real differentiator. You put it in your job descriptions, you talk about it in your interviews, you live it and you breathe it. Your employees like feel like they have something like solid that they really understand how you're investing back in them beyond compensation. And sometimes that means you're not having to pay the highest comp. The second one I'll give you is connecting your strategic plan to your variable compensation really clearly, like your actual outcomes in your strategic plan to your variable comp. And that measurably makes a difference too.
Okay, as we wrap up here, was there anything different about this year in any material way? And if not, what is just your take? I know this is maybe a weird closing question, but what is your take on the state of the RIA industry?
This year's study still showed it's really strong. We saw, I think, a 17% revenue growth, which we know is a trailing factor, but it's a healthy industry. I think the most surprising thing for me, we asked the AI questions for the first time in depth, and we saw 68% of firms are using AI already. It's still very experimental, I would say. Note taker is the most like ingrained piece. I'm really interested to track that over the next couple of years and see as we start to get more strategic, start to look at redesigning workflows in particular, and really focusing on data, cleaning up the data and getting data in good shape, like what we can do next. So I'm excited about that.
Me too. I spend a lot of time talking to these young companies and seeing what's out there. And there are some that I've seen very recently that are like, if this can do what you're saying it's going to do, well, I'm excited.
Maybe we could talk about that next time. That sounds great.
I'm excited to see what's on the horizon. So Lisa, thank you and to Schwab for all of the work that you do, showing advisors what is going on in the industry and teaching us how we stack up versus our competition. So
thank you so
appreciate
much.
you coming on.
Thanks for having me.